Hi everyone, welcome back to Corporate Decoder, the place where we take those confusing corporate reports and make them, well, a little less confusing. Today we're diving into the Bernstein Fund's semi-annual report. And trust me, with all those numbers, you might need a decoder ring just to read it. This report covers the first half of their fiscal year, wrapping up March 31, 2020 start. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, where you can join the conversation about all things finance. Before 4 covers the first half of their fiscal year, wrapping up March 31, 2025. We're going to see how their international small cap portfolio have been performing. Did they hit it big, or is it time to worry? And before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can join the conversation about all things finance. This report is basically Bernstein Fund talking to its shareholders, letting them know what's been happening with their investments. Think of it as a school report card, but for your money. Let's look at the cost, because who likes hidden fees? For the international small cap portfolios advisor class, it costs $53 for every $10,000 invested. That's about 1.27%. So for every $100 you have in there, about $1 goes to covering costs. Now, for the important bit, how did the international small cap portfolio do? Well, over the last 6 months for the advisor class, they were down about 2.85%. However, looking at a longer term, the 1-year average is almost 7% and the 5-year average is almost 12%. Keep in mind, though, that past success isn't a guarantee of future performance. That's the boring but very true fine print. The key portfolio statistics for the advisor class say that a lot of fees are being paid. Over $5 million were paid in total advisory fees. Where was all this money invested in? Looking at the sector breakdown, the biggest chunk was in industrials, around 20%, then financials at 13%, and information technology at 12%. Basically, your money was spread across factories, banks, and tech companies. Geographically, Japan was the top country with about 25% of holdings, followed by the United Kingdom at 10% and India at 7%. So it's not just a US show, it is spread across a few other nations. Moving on to the Class Z shares, it's a similar story to the advisor class when we look at the international small cap portfolio. Slightly different performance, but pretty close. Oh, what about the other portfolios? Let's find out. Switching gears, let's look at the international strategic equities portfolio advisor class. Here the costs were much lower, only $35 for every $10,000, which is about 69%, not bad, but again, let's see how it performed. The 6-month returns here are positive, about 2.24%. The 1-year looks great, around 7%, while the 5-year is also around 11%. Looking at the statistics, total advisory fees are paid, but they are a bit higher in comparison to the previous portfolio, around $26 million. That has to do with its scale and size than the others. This portfolio is big into financials at almost 25%, then industrials at 18% and information technology at 12%. The country breakdown has Japan at 15%, United Kingdom at 14%, and China making a showing here at 9%. So similar pattern to the prior, with Japan as their biggest holding. Similar to the previous portfolio, Class Z looks almost the same for the advisor class. Okay, we will skim on the next one as there's nothing radically different to the others. Okay, let us check on the small cap core portfolios advisor class now, because why not? Here the costs were just over $40 for each $10,000 invested, or just shy of 1%. The 6-month is negative, around 11%, but looking at the 5 years, it's close to 15%. Let's quickly check the graphical representation of holdings. With the sector breakdown, with financials at almost 20%, industrials at almost 18%, and healthcare at just above 16%. This one does not have many holdings across nations. As with the other examples previously, Class Z mirrors the advisor class. As with the others, again, the SCB class also mirrors. There is information about the advisory agreement review, but it's not super interesting. FTW logo and Alliance Bernstein are registered trademarks. Now, what does all this mean? Basically, it seems Bernstein Fund had a mixed 6 months. Some portfolios did better than others, but overall there's nothing here that screams trouble. Remember, it's a snapshot and things can change fast in the market. They have a broad investment across sectors and nations which can help them when something goes wrong. And however, in the past 6 months, the majority of the funds have taken a hit compared to the previous performance. How can we make this better? Hard to say without more information and just knowing that we know we are only seeing this with limited context. If you found this breakdown useful, be sure to smash that like button and subscribe for more corporate decoding. What are your thoughts on Bernstein Fund? Let's talk about it in the comments. Also, don't forget to join the Discord server in the description to discuss this and other investment topics. Thanks for watching and see you in the next one.